I'm talking about PLDT releasing the third quarter earnings, and our reporter Bim Santos has more of the details. Let's take a listen.
PLDT maintained its growth momentum for the third quarter on the back of continued growth for its wireless and fixed units. The firm booked a core income of 19.4 billion pesos for the 9 months, up 1% year-on-year, as revenues reached 116.3 billion pesos, up 8%. PLDT says they are on track to hit their growth guidance of 26.4 billion income for the year. Reported net income, however, was down 2% year-on-year to 16 billion pesos due to lower gains from the company's Rocket Internet shares and higher personnel expenses. The company's wireless, home, and enterprise units all combined for 109.4 billion in revenues, up 11% year-on-year. PLDT Chief Revenue Officer Alfredo Pandillo said marginal gains in their market share gives reason for optimism.
From a total market share, we're up now to 51.9%. So humble steps, but I think we're showing growth in the past 2 quarters.
Not ecstatically happy, but happy because I think we've gained market share, as I said. Obviously, it's not, we can still do better. But I think it gave, it's a lot of effort to regain market share both on wireless and fixed, and I think the team has worked hard to do that. And again, as I said, hopefully we can sustain that in the fourth quarter and also next year.
PLDT Chairman Manuel V. Pangilinan said they will continue to ride on the growth momentum they have built, even as he noted the industry has now grown more challenging.
To raise revenues and increase it quarter on quarter is a tough job because it's a much more complex business. Third quarter, and I think the second quarter numbers you saw showed improvement in the overall quality of the growth. Pero always the question is, how sustainable is it? And if it's sustainable, at what rate can you continue to grow? See, the answer is we should maintain that sustainable factor of our revenues. We've been there, we've done that. There is no reason why we cannot do it again.
Pangilinan said capital expenditures for next year will remain elevated as they continue to spend on their infrastructure rollout. One spending item for next year will also be on their 5G network. As Pangilinan said, they may start to choose about 2 vendors to partner with. PLDT also aims to unload next year its remaining 1.9 million Rocket Internet shares. Pangilinan admits the investment was a misstep, though not as worse as it could have been.
Taken from a purely financial perspective, it was a misstep. One small misstep, but a big giant step in our towards our familiarizing ourselves in investing in digital. On the whole, it turned out to be not so bad. The losses are not as big as we had anticipated, diba? Because nag-recover siya.
Bim Santos, we are One News.